Hello and welcome to this week's Forex Outlook. I'm Marios Hatchikiriakos, investment analyst here at XM, and here with me is our senior currency analyst, Rafi Bogajian. So Rafi, it has been a relatively calm week so far, although we have seen some movements mainly in riskier assets, such as stocks, for example. So the week began with some very positive numbers out of China. The PMIs in specific, they rebounded, so they painted a slightly more, let's say, optimistic picture of the Chinese economy. They alleviated some concerns about the slowdown. Could you please guide us through that?
That's right. We saw both the official manufacturing PMI as well as the cash-in manufacturing PMI return to positive territory. And so that signaled that the slowdown could perhaps be bottoming out, and we could be seeing the start of an upturn in Chinese growth, in Chinese, at least in the manufacturing sector. We also did have some more positive manufacturing PMIs out of the United States as well. So that overall boosted market sentiment. And we're going to have more data coming out of China next week. We're going to have trade numbers for March. In February, of course, you remember we saw that big drop in exports out of China. Partially that was due to the timing of the Lunar New Year holiday, and it is expected to rebound in March. So if we do see any negative surprises in the trade numbers next week, that could perhaps dent that upturn in market sentiment we saw during the past week.
So I might add that besides the stocks being lifted in this, let's say, rising tide, we also saw oil, a very risk-sensitive commodity, rising to multi-month highs on this positive demand backdrop, I would say. But let me switch the topics and go to the UK, where it's always interesting lately. We had another set of Brexit votes this weekend. Strangely, I should say, we saw the Prime Minister say that she will meet with the leader of the opposition for talks in order to find a way forward. And I have to admit the pound liked those news. It's performing decently this week. Could you please give us your take?
That's right. The pound is set to end the week higher. So if the Prime Minister Theresa May, like you said, she's in talks with the Labour leader Jeremy Corbyn, the most likely outcome of any agreement between the two leaders would be to agree on a customs union. So the UK would stay in a customs union after leaving the EU, and the markets like that because it means there's not going to be that complication of the backstop ever being enforced, and it also would be good for businesses because it would mean frictionless trade between the UK and the EU, even after the UK has left the European Union. Of course, there's still some dangers. We don't know if Jeremy Corbyn will be making other demands to Theresa May, and also we don't know yet if how the length of any extension that the European Union will agree for the UK. Of course, the EU gave the UK an extension until April the 12th. If the withdrawal agreement has not been agreed yet, and so next Friday, there's still a risk of a crash exit for the UK out of the EU, although markets don't really see much of a chance for that to happen. We saw this week the UK Parliament passing an emergency law that would block the government from having a disorderly exit without first requesting an extension to the EU. The EU will likely give an extension, but if we do see a very long extension, possibly until the end of the year or even longer, that's only going to add to the uncertainty because this whole Brexit saga is just going to drag on. So that might not be too positive for the pound. The best outcome for the pound would be if there's an agreement on a customs union.
So, as a joke, I should add the best outcome for the pound is probably another referendum or any hints for that.
Exactly.
Right?
Yeah, indeed.
But let's move on to the coming week. What's on the agenda? What should we look out for?
Well, we touched a bit on Brexit, so we've got that emergency EU summit on April the 10th. So this is May has to secure an extension on this at this summit. Otherwise, we could yet see a crash exit on April the 12th. And of course, any headlines regarding talks between May and Corbyn will also be closely watched. But in addition to all that, we will have some important data out of the UK. We're going to have monthly GDP numbers and industrial production numbers. We saw this week the March services PMI being on the weak side. It actually fell below the 50 neutral level. So if you do see more weakness coming out of the UK, people might start once again focusing a bit more on the data than on Brexit if the UK does appear to be headed towards a recession. We're also going to have the European Central Bank policy meeting on Wednesday. We're going to have a slightly earlier meeting in April due to the Easter later on in April. We're not expecting any changes from the ECB. Of course, in the previous meeting, we saw the ECB pushing back its expected timing of a rate hike. We also saw that announcement regarding a new round of cheap loans for banks to stimulate lending. So it could be a slightly more boring meeting this week, but as always, Mario Draghi's press conference will be watched very carefully. We're also going to have the Fed policy meeting minutes from March. They're unlikely to bring much surprise to the markets. The Fed has been fairly consistent in its message from all the policymakers, in fact, so we're not expecting any surprises there. And we're also going to have some US inflation numbers that should also keep traders fairly busy.
Thank you very much, Rafi, for your input, and thank you everyone for watching, and see you next week.